Hi everyone. I hope everybody is doing fine. Uh, this a small attempt that I'm trying to make to explain basic concepts so that you will not waste time at home and you will continue preparing for exams, especially those students who are writing in June. Exams might be postponed, but as of now, ICSI has not given any new date, but we are waiting. Most probably, the exams may be pushed towards July, but not more than 30 days because already exams are in the month of June, and at the most, exams may be postponed to July, but that is not yet declared. But let's wait and see because uh, ICSI will expect students to prepare at home. They won't expect because they don't expect that the students will be attending classes and all coaching centers. Coaching of any professional course is not their botheration at all. But let's see, 100% exam will be postponed. But even then, instead of simply wasting time at home, you just go through these small videos. This will definitely help you for your preparation, right? So I wanted to start with lesson 2, share capital. That is module 1, company law. Lesson 2, share capital. In this lesson, if you could see, you have 6 important parts. Part 1, meaning and types of share capital, and part 2, concept and issue and allotment of shares, and part C we have got issue of securities, part D we have got buyback of securities, part E we have reduction of share capital, and part 6 we have transfer of shares. Alright, so out of these I could say from this lesson most probably you will have 4 questions, each one if it carries 5 marks, around 20 marks weightage, but unfortunately 2 questions will be in choice category and 2 questions will be attempted by you. That's the thing. So out of all the 6 parts, if you could see, uh, part B, part C, part D are more important when it comes to theory, and remaining things may be important for practical. Out of 20 marks worth from this lesson, uh, 10 marks will be of practical and 10 marks will be of theoretical. But the trend, if you could see last 3 years or 3 exams, sorry, last 3 exams, if you could see, you will find maximum number of questions from this chapter in the form of practical in nature. So therefore, when you attempt an answer, you must write the section. If you without writing section, you are not supposed to attempt the answer at all. If you, in case you are attempting also, they might give you 1 mark out of 5 marks. So be very careful in this lesson, especially in particular. You must remember most of the sections which I would tell you while I was explaining, or sorry, while I'm explaining this lecture. So let's look at the first page. I advise you to have the textbook while you are listening to this. It's better because anyway I'm copying from the textbook only. It is exactly from the textbook, and this video would definitely help you um, in understanding basic concepts. I will not be very in detail, but I will definitely try to explain the main concept of each lesson so that you will have continuous in your preparation. Right, look at the first one. What is a capital? Capital, in terms of company law language, capital is basically the share capital. Capital means the share capital, which means the capital which is brought in by the people. If in case company wants to raise 100 rupees of capital, and let's say 10 people have invested 10 rupees each, so the total capital is basically the share capital because it is not of the company, which is mobilized from the investors. So if you could see on the third paragraph, you have in relation to company limited by shares. I think you know the meaning of company which is limited by shares. That means liability of the members in this kind of a company is limited to the extent of shares which are unpaid. So capital means the share capital. That means in terms of rupees divided into specified amount of specified number of shares of a fixed amount. Example also is given very clearly. Say for example, company share capital is 1 lakh rupees, and that is divided into 10,000 shares of rupees 10 rupees each, or 1,000 shares of 100 rupees, whichever is feasible for the company can issue. That means if company's company is authorized to raise 1 lakh rupees, and company can issue 10,000 shares of 10 rupees each, or 1,000 shares of 100 rupees each, whichever is convenient for the company in this regard. Alright, that is the definition of capital, but in general capital can be money with respect to business, but when it comes to capital in company law of a company is basically the capital which is in the form of share capital, which means it is mobilized by the company from the public in the form of issuing shares to the public. I hope that is clear. Next, if you could go the next paragraph, classification of share capital. We are basically there are different types, but some types are not printed here properly, but I would tell you, so listen to me carefully. Number one is nominal or authorized or registered capital. See, authorized capital is the capital. See, if you could see the definition here, authorized by the memorandum. That means the capital which is mentioned by the company in the memorandum, stating that we would like to raise this much of money from the public. And the same capital which is mentioned in the memorandum has been registered with ROC, hence it is also called registered capital. Alright, section 2, subsection 8. The second one, if you could see, issued capital. Say for example, my authorized capital is 100 crores. Let's say for example, my authorized capital is 100 crores. Am I clear? So company has been authorized to raise money up to 100 crores. This 100 crores I wanted to raise only 60 crores. The issued capital is nothing but the capital which is issued by the company out of this 100 crores capital. I repeat, company is authorized to raise 100 crores capital, but company has decided to issue only 60 crores amount of capital. So the capital which is issued out of authorized capital by the company is called issued capital. Clear? That is section 2, subsection 50. The next one, if you could see, subscribed capital. So I issued 60 crores, and out of 60 crores, public have taken up only 40 crores. I repeat, my allowed capital is 100 crores. Out of 100 crores, I issued only 60 crores. Out of 60 crores, public have applied for 40 crores. Means I wanted 60, but public have shown interest in 40 crores. That is subscribed capital. So 60 minus 40, if you could see, 20 crores will be the unsubscribed capital. You can make a note of it. Clear? Clear? Next one, if you could see, called up capital. Section 2, subsection 15 clearly says, so how much is subscribed? 40 crores. But company has taken so far only 25 crores. That means called up capital is a capital which has been demanded by company over a period of time. Generally, if company is limited by shares, the person at the time of joining, he would definitely invest something. That is, at the time of sending his application form, at least 5% of the total investment, 5% of the total investment that he would like to invest in the company should be sent across along with the application form. So in that way, majority of the shareholders who have agreed to invest certain amount of money have not sent total money to the company. So subscribed capital is 40 crores, means they are interested in investing 40 crores, but out of which they gave as of now only, I mean, they have been called by the company only to pay how much? 25 crores. So 25 crores in my example is basically the capital which has been so far demanded by the company. So what is called up capital? The capital which has been asked by the company from the subscribers. So 40 minus 25, the balance will be obviously uncalled capital. Clear? Next, paid up share capital, the capital which is actually been paid up by the investor. Let's say for example, I have decided to invest 1 lakh rupees. Assume I have decided to invest 1 lakh rupees. Out of 1 lakh rupees, I paid as an individual to the company so far only 60,000 rupees. That means my paid up capital is 60,000. So my paid up capital plus all the other shareholders' capital which has been paid will be together called as paid up capital. The amount is actually credited in respect of the amount of money. So 1 lakh worth of shares I have decided to buy, but the amount that is credited in company's account from my side is only 60,000. So the money which is actually paid by the shareholder so far is basically paid up capital. Section 2, subsection 64. This section is very important. If in any case practical question, you must start your answer with provision, right? So alright, I once again repeat here, please make sure authorized capital is the capital which is authorized by memorandum. Remember, don't write the word authorized by ROC. Authorized by memorandum but registered by ROC. Issued capital out of, let's say in my example, 100 crores is the authorized capital, but I've decided to raise only 60 crores, rest 40 crores I would be raising later. Alright, then 60 crores I have issued, but only 40 crores worth has been subscribed. And the remaining 20 crores is unsubscribed. Out of 40 crores which I have, which has been subscribed, is demanded by the company is only 25 crores. So the remaining difference will be uncalled capital. And from the investor perspective, the capital which is actually paid by him, or the capital which is actually credited into the shares in respect of shares of the company, is called the amount that is paid up share capital. So simply speaking, from my side, if I have decided to invest 1 lakh rupees, I have invested so far 60,000 plus all other people, whatever they have so far invested out of the decided amount that they have decided to invest, is basically the paid up capital. So paid up capital is the capital which is paid up by the shareholder in respect of shares so far. That is, out of 1 lakh I gave only 60,000 rupees. That is the story. Alright, let's look at the next look at the next concept in the next video, because the size of the file will increase. Just let me know, give me the feedback if voice clarity or speed or anything is there. Let me know through WhatsApp so that I will tune my lecture accordingly.